Good day, students. Once again, I will be doing exercise 12.7 with you on the topic or chapter of process costing. It says Cibiso Ltd manufactures a product in a single process. The minute it says in a single process, that means there is no previous process because it is a single process. And they tell us that the company uses a process costing system and values inventory using the FIFO method. All materials are added at the beginning of the process and conversion costs are uniformly incurred. Normal loss is estimated at 20% of the units that reach the point of inspection. So now 20% of the units that reach the point of inspection will have to calculate the normal loss on that. And they say that losses occur when the process is 50%. Losses occur when the process is 50%. That means, in other words, inspection point takes place when the units are 50% in terms of production process. They say the following information is available for the month of November in the year 2002. We are given the units and we are given the rand amounts, and they gave us the opening work in process, which is 77,000 units, and that will be 40% in terms of completion. So now that means our opening is 40% in terms of completion. Then after they give us material, and the material is the value of the material 90,000 and 45,000. That means this is the opening work in process in terms of raw material and opening work in process in terms of conversion cost. And these are the rands amount 90,000 and 45,000 rands, hence is under the column of rands. Take note of that too. Then after it says that cost details for the month. That means these are the costs that were incurred during the month. That means this will be recorded under current cost. That means they will be recorded under current cost. And these are the costs that were incurred during the month. And the total material, raw material or direct material is 894,400. And the total cost incurred in terms of conversion cost, it amounted to 497,840 rands. Then after we are given again the units, and under the units they gave us the production details for the month, which is unit placed into production. That means these are the units that we started with. And in the template, then this will be the units that we have started with. Then units that were completed, these are the units that were completed and transferred into finished goods, and that will be a total of 32,000 units. And the closing work in process is 7,200 units, and these units were 75% complete. That means this is with regard to conversion cost, even if they don't make mention of that, because we know that material was added at the beginning of the process. And because of that, it means the 75% units that are left at the end of the year, they are 75% complete in terms of the conversion cost. However, it's 7,200 units, but all the material that was needed to produce this product was all 100% there. So now the 75% incomplete part is in terms of the conversion cost, and also in terms of the conversion cost, in fact, which is the labor and overheads. Then after it says prepare the production cost report for the month of November, and after prepare the production quantity schedule, assuming that losses take place at the beginning of the process. So now that is the assumption that the loss is taking place at the beginning of the process, and whenever the loss takes place at the beginning of the process, therefore now the normal loss will not be accounted, or it's taking place at the beginning of the period, then we'll have to account for abnormal loss if there is abnormal loss. However, now in this case we are told that the loss takes place at the beginning of the process, which is the normal loss. So any loss that takes place after the beginning of the process is no longer normal, but it is abnormal loss. So now if the loss takes place at the beginning of the process, that means that normal loss will not be recorded in all other variables, being raw material and conversion cost. Then now this is what we are given, and we will be using the template that I suppose everyone knows in terms of completing this. So now this template is the quantity statement. Start with the input, and we have opening work in process there. We have previous process, we have started, that means the ones that we have started with. So now let us move in that same note where we record now our opening work in process in terms of units. Remember, this is quantity statement. We only record the units here. Opening, closing, completed, started with previous process. All those units, the closing, normal loss, and abnormal loss will all be accounted in this quantity statement. So now we were given our opening work in process, and remember we are dealing with the first process, which is only process 1. I think the first page clearly stated that we are dealing with the first process. They told us that they only have a single process, only one process. So now there will be no previous process because it's only one process that we are dealing with. So now continuing with that, and we see that our opening work in process, it is 7,000 units. So now that must be recorded under the opening work in process as 7,000 units. Here O is opening work in process, is work in process, as you know. Then now we know that these units, they are 40% in terms of completion, but that is not applicable now. It will only be applicable when we start calculating the amount of the units that are the normal loss, and also when we calculate the inspection point. Then after we also are given the material, this will be in rands and they will affect the cost statement and the cost allocation statement. Then now let us go to the units once again. Here is another column or line for the units or paragraph. We have units that were placed in production. That means units that will started with. So now this 43,000 units will be the units that will be recorded here as 43,000 units. And here I don't know where the 7,000 went to. So now we have the 7,000 and the 43,000 units. Let me just rewrite that: 7,000 units and 43,000 units that we have to record. This is the one that we place into production. That means the one that we started with. Then after we record the units that were completed, they say units completed and transferred into finished goods. So now when units are completed, they must be complete in terms of everything. And those units that are complete, they tell us how many of them. So now we'll just record them as they are. The units that are complete, it is 32,000 units. Here are the units that are finished and they are transferred into finished goods. So now let us record the 32,000 units that were complete. Complete units will be 32,000 under output because it is the output is completely done. Previous process, we don't record anything. This is PP, previous process. We don't record anything because there is only one single process. So now under previous process, there is nothing to record. Meaning throughout, there is nothing that will affect the previous process because we are only dealing with the first process. Then under raw material, we record the whole 32,000 rands because the units are complete in terms of everything. And also with regard to conversion cost, these units are complete. So now we record the same amount throughout. Then we go to the next part. The next part now is the closing work in process, which is 75% complete in terms of conversion cost. I said don't forget that it is in terms of conversion cost. 7,200 units. Those 7.2 units will be recorded under output as 7,200. Remember, this is under closing work in process. That C is for closing. O is for opening. That is closing work in process. Under PP, we don't record anything because we don't have a previous process. So now remember, we were told that material is added at the beginning of the process. So now if material is added at the beginning of the process, that means all the material that is needed was all there. That is why now under the raw material column, this is raw material. Under raw material column, we have to record the total 7,200 units without multiplying by the 75%. But with regard to conversion cost, we have to say 7,200. We multiply this by 75%. Therefore, now that will give us an amount of 5,400 units that will be allocated to the conversion cost, because the conversion cost are incurred uniformly. So now in this case, these units were only 75% complete in terms of conversion cost. Therefore, now if that is the case, we must record the partially completed units. That means units that are not completely completed, but they are so-called partially completed units. So now we have recorded only 75% completed portion in the conversion cost as 75% of 7,200. That means out of that 7.2 is only 5.4 that is partially complete in terms of conversion cost. However, material is all there at the beginning of the process. So now with regard to the units, we have covered everything that they wanted us to cover, and immediately when that happens, we can calculate the total where we add our total 5,000, we add our total of 7,000, starting first with the column of the input. This is where we start. We say 7,000 plus 43,000. And this will give us 50,000 rands here under total. Therefore, now this will be 50,000 units, not rands. Then now we see that we have 32,000 that was completed, and we have 7,200 that was not complete, and that gives us 39,200. And there is a closing work in process. We are closing work in process, which is 7,200. And the total is 39,200. However, the input units that we started with was 50,000. But now why all of a sudden the completed plus the closing, they gave us 39,200? Because the units that are completed plus the closing units, it should give us 50,000 units. That means there was a loss here, definitely. So now if you say minus 50,000 units, that will tell us that 10,800 is a loss. But we don't know which one is a normal loss and which one is an abnormal loss. So now we first have to check or calculate our loss. So now in this case, we have the total loss. We have the total loss of 10,800. Now, why do we say this is a total loss, or we say this is a loss? Remember, we started, or there was opening units of 7,000, guys. And we started with 43,000 units. That means units that went through the process of production, or units that were in process during this period, it was 50,000 units. And we know that closing is 7,200. Closing is 7,200. Or we know that, in fact, we know that 32,000 was completed. And if we say 32,000 less 50,000, because we know that total units was 50,000, and we know that though that we completed were 32,000, and if we do that, it gives us 10,000, 18,000. And to say in that 18,000 was supposed to be the closing, but 18,000 is not the closing. So now if we separate the two, we get 18,000, which was supposed to be the closing. But we see that our closing is only 7,200. So now what happened to 10,000? So we say less 7,200, which is our actual closing, and we realize that there are 10,800 units that disappeared, that we don't know where they are. So now if 10,800 units are nowhere to be found, then this is definitely a loss. And this is a total loss, not just a loss. So now out of this total loss, we still have to calculate which of the loss is normal and which of this is abnormal. Remember, we still have to use our timeline. Nothing has changed. We still use the same timeline to prove or to calculate either the units have passed or will pass the point of inspection. And we know that we have 100% and we have 0%. And we are told that the point of inspection is when the units are 50% in terms of completion. Let us check that. Yes, they told us that inspection occurs when the process is 50%. So now we are already aware of that. And because of that, we can put the point of inspection almost at the middle point of our timeline. And we say inspection. We want to know how many units went through the point of inspection, or which units did not go through the point of inspection. And we know that our opening was 40% in terms of completion. Our opening was 40%, and we know that our opening was 7,000 units, 40% in terms of completion. So now that means our opening was before the point of inspection. Therefore now if you see here, then we write that as our opening units. Then our closing units, I think it was 75%. Yes, is our closing work in process. Our closing work in process is 75%. So now if this is 75%, it means it was around the end of the process, 75%. So now this is our closing. And don't forget the method that I taught you for those who watched the video on the introduction on process costing, where it say that opening start from a given percentage. Opening start from a given percentage up to 100%. So now if it start from a given percentage and the given percentage is 40% and it goes up to 100%, it means it will obviously pass through the point of inspection, because inspection is at 75%. At this point, they will inspect these units and they will go up to 100% to be completed. So now it means if we ask the question, will the opening pass the point of inspection? The answer is yes. And if the answer is yes, it means we do nothing. Then we check our closing. Here is our closing units. And we know the principle that closing starts from 0% up to a given percent. Here is our closing, which is 75%. And we know the rule that closing start from 0% up to 100%, up to a given percent. From 0% it went, we manufacture, we pass the point of inspection. Oh, sorry, I said the point of inspection is here. The point of inspection is here, not that 75%. Just correction for that. However, the opening will pass the point of inspection. So now our closing will move from 0%, go, and pass the point of inspection and move. When it's 75%, it becomes the end of the process. That means now, obviously, the closing will pass the point of inspection, which is 50%. And obviously, let me just emphasize again on the opening, because I wrote that under 75%. Opening start from a given percent, which is 40%, up to 100%. Then from 40%, it moved from here and past 50%, and it was inspected, and it will go up to 100%. Meaning now, opening, yes, will pass the point of inspection. Closing, yes, will pass the point of inspection. And if the answer is yes, they will pass the point of inspection. What do? We do nothing. It's only when they do not pass the point of inspection that we deduct. Therefore, now that means inspected units. Inspected units will be the total input output. And our total input output, we know that it is a total of 50,000. Here is our total input output that we're talking about, total of all of them. So now it means our units inspected will be 50,000 units. We don't deduct anything. We multiply that by the percentage of the loss, and let us check if what is the percentage of the loss that we are dealing with. The percentage of the loss, I think it was given to us as 20%. They said normal loss is 20% of the units that pass the point of inspection. So now let us check which of these units pass. We have checked those units that pass the point of inspection, and they said to us there that normal loss is estimated at 20% of the units that reach the point of inspection. So now that means 20% of the units that reach the point of inspection, which is 50,000, will be as our normal loss. So now that means we have to say total of 50,000. We multiply this by 20%. It gives us 10,000. It gave us 10,000 units. That will be our normal loss. That will be our normal loss. That will be our normal loss, meaning our normal loss, I always do this on the same page, which on the same line, which is not supposed to be. Our normal loss is 10,000 units. Those are that inspected units, 10,000 units, which is 50,000 units times by 20%. The 50,000 is the one that come from there. So now if we have our normal loss, we also have to calculate our abnormal loss, because we are aware that our total loss is 10,800. This is the total loss that we have incurred, that we have calculated, total loss. So now we have to say our total loss is 10,800. Total loss is 10,800, and we have calculated that. Then after we say our abnormal loss now, our abnormal loss will be equal to total loss of 10,800 less our normal loss of 10,000, and that will give us 800 as our abnormal loss. Therefore now 800 units are abnormal loss. That means the loss that can be controlled, loss that is unexpected. So now let us split in our table where we allocate our losses into both normal and abnormal. And we know that under normal loss we record that only under the output, because normal loss only take place at the beginning of the period. Therefore now under normal loss we record 10,000 units. Under normal loss we record 10,000 units. And they told us that normal loss occur at the beginning of the process, and if that is the case, it means it will not have impact to other components, being raw material current period and conversion cost current period. Then now our abnormal loss, which is 800 units, that abnormal loss will not go to previous process, because this is the single process they have. Therefore now that will be 800 units. However, with regard to conversion cost, don't forget that we multiply by the percentage of the point of inspection. That means we say 800, we multiply that by 50 over 100, because when the units are 50% complete, we inspect. Therefore now we multiply by the percentage of the point of inspection, and that will be allocated under our conversion cost. And with that being said, we can calculate our totals. 400 plus 5,400 plus 32,000. That will give us 37,800, which is the total partial completed units. 37,800 units. Then we say 32,000 plus 7,200 plus 800. That will give us 40,000 units under the raw material. 40,000 units. Then after we say 32,000 plus 7,200, I don't know why I wrote 72,000 here. 7,200. Let me just erase this 72,000, which is 7,200, and redo. We'll say first that, then I just want to erase the wrong calculation that I've done. This is 7,200 and this is 7,200. However, it does not change any of the calculations. So now we say plus 7,200 plus 10,000 and plus 800. That will give us 50,000 units. That will give us 50,000 units. That will give us a total of 50,000 units. 50,000 units. That will be 50,000 units. So now that will be the correct amount of the units that we have with regard to the output, with regard to the raw material, and with regard to the conversion cost. So now the total of these units is 50,000 here. Total is 50,000 units. Total is 50, just confirmation, 50,000 units. Now let us continue and we complete now the next statement. We have done everything. We have calculated the normal loss, the abnormal loss, and we have allocated it throughout. So now we go straight to the cost statement. Under the cost statement, we deal with the costs. We deal with the cost, meaning we are dealing with the rents here. There's the opening working process. That means the rents that were there in terms of the opening value of the units that you are manufacturing, or the value of the opening stock. We have the current. This is the cost that was incurred in the current period, and opening plus current is equal to total cost. That's what you must know. Opening plus current is equal to total cost. Obviously, this column, which is PP, or this cell PP, will not be applicable throughout. Why? Because there is no previous process. We are dealing only with a single process. PP refers to the previous process. So now there are no costs that will be incurred from a previous process because we are only dealing with a single process. That also be mindful of that. Total cost is opening plus current will give us total cost. That means opening plus current will give us total. Just say plus is equal to total cost. The total equivalent units. This is the total equivalent units. All of this is coming from this statement. It comes from the quantity statement. That means we are dealing with the units here. Just be mindful of that. We are dealing with the units here. It's only units that we deal with here. Also take note of that. And the last part is the equivalent unit. So now this is, in other words, this is the cost per unit. Cost per unit. This is cost per unit that will be recorded in this case. So now cost per unit will be total cost. It will be this column divided by this column. Then we get to the per unit. That means total cost divided by total equivalent units. That will give us total equivalent cost per unit with regard to raw material and also with regard to conversion cost. So now let us record our cost. Let us record our costs. Now with regard to our cost, let us first check which cost do we have. We do have the opening. There is opening raw material. Our opening raw material is 90,000. Opening raw material. Therefore, now under our opening raw material, we have to record 90,000. Here is opening work in process, the value. Under PP, there's no previous process. Under raw material, we record 90,000 rands. We record 90,000 rands. Opening cost in terms of conversion. We do have opening cost in terms of conversion. And our opening cost in terms of conversion, 90,000. I don't know why this disappears. Okay. That is 90,000. Then after now we go to the next part and we check for the conversion cost. Our opening work in process with regard to conversion cost was 45,000. This is under the rands column. Don't forget, these are not the units. So now this is the value of the conversion cost at the beginning of the process, opening work in process with regard to conversion cost. And that is given to be 45,000 rands. And we record that 45,000 rands as it is. Then after immediately we go now to all other costs. That means we are looking at the costs that were incurred in the current period. Current cost. That means cost incurred during the month. So now sometimes they will say current cost. Sometimes they will say cost incurred during the period or during the month. And we do have costs that were incurred during the period or during the month. And now let us check these costs that were incurred during the period. And the costs that were incurred during the period are given unto us. And here are the cost details for the month. They tell us for the month, the cost details for the month. This was cost opening. It was under opening. But this is for the month of November that we are dealing with. So now let us record the cost. The cost incurred for the month in terms of material, it was 894,400. And with regard to conversion cost, it was 497,840. And we record them under the current cost, under the cost allocation, or under the cost statement. So now we record that 894,400, 894,400, and the last one is 497,840. Then after, we can just calculate the totals of the two, where we just say under the opening 90,000 first plus 45,000 rands, that will give us 135,000 rands. 135,000 rands. Then the next one we say 894,400 plus 497,840, and that will give us 1,392,240. That will be our total current cost. So now our total cost, I did make mention that it is the opening work in process cost plus the current cost that will give us the total cost. So now it means we just add the two, where we can just say 1 million under the total, 1,392,240 plus 135,000. That will give us 1,527,240. That is the total of the totals. Then we calculate the total of the raw material, 90,000, opening work in process, plus 894,400. That will be 984,000. 984,400. Then after, we say 45,000, which is the opening cost work in process, plus 497,840. That will give us 542,840. 542,840. So now this is our total cost, or these are our total cost. Then now we need to look at the total equivalent units. This is where we are now. We are looking at the total equivalent units. And I told you that this column is only for the units. We are dealing with the units. So now we have to go and look for the total. Everything is already calculated for us in this case. We just say, okay, under units, we look in this column and to say, this column, we don't have the previous one because we are dealing only with the first process. This column is under raw material. That is the raw material. We look at the total of the raw material equivalent units, and our raw material equivalent units, there is the raw material equivalent units. How many units in total? It is 40,000 units. So now we just record that 40,000 as it is. We don't change anything. And our conversion cost total units, it is given there as 37,800. Nothing that changes. We record the amount as it is. So now we record that 37,800 as it is. Then now what do we do now? What we do, we take the total cost, we divide by the total units to get the cost per unit. It's the same thing that you know in cost accounting 1. Our total cost is for the raw material first. Total cost for the raw material, it is 984,400 divided by total units 40,000. Therefore now that will give us 24 and 61 cents. This is the raw material cost per unit in simple terms. The raw material cost per unit. Then now we calculate the conversion cost per unit, which is total cost of 542,840. Then we divide that by the total units, which is 37,800. Then that gives us 14.360805. Preferable, just take it to 5 decimals. They just normally do that. Then after, we calculate our total cost per unit now, where we say 14 plus 24 rand 61 cents. That will give us 38. That will give us 38. 38, let me just rewrite with the little small 38. I think I must use the small one. 38.97 970 85. So now that is the total cost per unit. And immediately when we are done with that, now we can do the last statement. I'll just use the small one because it seems the font is too big for my writing. Then now we come to the cost allocation statement, and here there's nothing new that we do. Cost allocation statement, it says completed units. Please memorize the format for this statement and have the template with you whenever you practice. Completed units, how many units were completed? We know that 32,000 units were completed. Here is the 32,000 units that were completed. 32,000 and 32,000 units were completed. So now we just say total cost, which is 32,000 units, times by the cost per unit, which is 38.97085. That will give us the total cost of production for all the units that were completed, which will be 1,247,067. Let me just do the calculation. We multiply that by 32,000 units that were completed. 1,247,067. So now I will not round off to that because they prefer not to round off when it comes to the total amounts. So now that will be the total cost. Then after we come to the normal loss and check if was there any. Yes, there was the normal loss, but with regard to the normal loss, remember, normal loss, they said it is taken into account at the beginning of the process. So now if it's in the beginning of the process, we don't do anything about the normal loss. We only go straight to the abnormal loss. And abnormal loss is divided into three: PP, raw material, and conversion cost. So now what do? We take the units of the abnormal loss under the raw material, the units of the abnormal loss under the raw material, and the units of the abnormal loss under the raw material, which is the raw material. Here the raw material, how many units? It was 800 units. So now we take the 800 units, we multiply that by the raw material cost per unit. We say 800 units, we multiply that by the raw material cost per unit. And we know that our raw material cost per unit is how much? Our raw material cost per unit, it is 24.61 cents. That is the cost per unit in terms of raw material. It's in the same line. In terms of raw material, there it is. So now that is the cost with regard to raw material cost per unit. And we take that, we multiply by that abnormal loss, which is 24.61 cents. Then we check how much will that give us. 24.61 cents, multiply that by the abnormal loss units, and that will give us a total of 19,688. Then after we go to conversion cost, we look at the abnormal units with regard to conversion cost, and abnormal units with regard to the conversion cost. Here is abnormal loss, and abnormal units with regard to conversion, it was only 400. So now if it's only 400, then we do the same thing. We say 400 units of the abnormal loss with regard to conversion cost. We multiply that by the conversion cost per unit. Remember, this is also in rands. Conversion cost per unit. Our conversion cost per unit is 14,36,085. So now we multiply by that, multiply by 14.36,085. Then we multiply the two, where we say 400, multiply that by 14.36,085. That gives us 5,744. 5,744. We add the two plus 19,688, and that will give us a total of abnormal loss, and our total abnormal loss will be written here as 25,432. Please ignore cents when you come to the total. However, you can take them into account just to be safe if the question is not clearly stated, depending also to what your lecturer taught you with regard to the closing or what the question says. Then now we come to the closing working process. We are looking for the value now. We do have closing units, but we are looking for the value of the closing units. And remember, we also did have the abnormal loss in terms of the units, but now we're looking for the value of the abnormal loss. So now that's why we multiply the units by the cost per unit with regard to raw material cost per unit and the conversion cost per unit. Remember, there's no PP or previous process because this is the single process they have. Our closing units with regard to raw material, it was 7,200 if my memory still serves me. Closing units in terms of raw material, we do have, there is the closing work in process with regard to raw material, it was 7,200. There is 7,200. So now we took that 7,200 and we multiplied by the raw material cost per unit, and our raw material cost per unit is 24.61 cents. Here is the raw material cost per unit, and here the cost per unit 24.61 cents. We multiply the units with the cost to get to the total cost. So now doing the same thing, we say 24.61 cents, multiply that by 7,200, and this will give us an amount of 177,192. 177,192 friends. So now we look for the closing inventory with regard to conversion cost. And our closing inventory with regard to conversion cost, I think it was 5,400. The closing units with regard to the conversion cost. And we have to multiply that by the value of the unit cost of the conversion cost. Our closing working process with regard to conversion cost, there is closing working process conversion. Let me show you that conversion, it was 5,400 units. There the closing working process 5,400. So now we take that 5,400 as it is, we multiply by it in this case. So now that will be multiplied by 14 point, because we know that our conversion cost per unit is here 14.36085. We multiply by the cost per unit 14.36085. Therefore now we say 14.36085, multiply that by 5,400 closing units with regard to conversion cost, and that will give us 77,549. Then we add the two, we say plus 177,192. That will give us the total of 110, total of 110, sorry, total of 210. It does not go there. It goes to the closing line. Yeah, that's where it goes. That is the total of 254,741, round off to nearest reference. Then now immediately when you are done with this, you can be confident to add all of them. Then you want to add, you just say 254,741 plus 254,000 or 25,432 plus 1,247,067. That gives us 1,527,240. 1,527,240. Please always make sure that your totals, make sure that your total cost here at the bottom is the same as the total. This total, make sure that is the same as the total cost that you dealt with there. It must be exactly the same. If they are not the same, then there is a problem. If they are not the same, there is a problem surely, because all these two are total cost. Make sure that that is equal to this, and when that is the case, then you will be fine. Let me just show you another angle, because what we have just done now with regard to the three statements, most especially the last two, this statement and this statement, what is very important about the two is the fact that these two statements, they show you that the work in process that we have done in chapter 8 and chapter 9 is still applicable. Just like in this case, we do have opening working process. Here is an opening working process, and our opening working process is given in rands in this case. And now I just want to do a ledger account where you can see what do I mean, so that we are able to do the ledger account for work in process, so that you can be able to understand something. So now what I will be doing with you now is to take the same information and I record this information in a ledger account perspective, which is the ledger account of work in process. That means you have to understand how also to do the work in process ledger account when you are given this information. So now let us check how we can do the ledger account for work in process if we are given information for this nature in an allocation statement. So now I'll just do the work in process for this company. Work in process. So now if we do work in process for this company, just want to show you that this is the same thing. You'll have an opening balance. You'll have an opening balance. And our opening balance in this case will have to be the opening balance as we see that opening balance in the allocation statement. So now let me just go and check that opening balance for you. Where will this opening balance come from? Here we do have the column of the opening balance. Here the opening balance. So now our opening balance will be a total of 135,000. So now that will be our opening balance when we do the work in process. That will be the opening balance when we do the work in process. So now the total at the bottom here will be the total of the opening work in process, because that is the opening work in process, and the total, which is raw material and conversion cost, that will be our opening balance. So now opening balance will be 135,000 rands. 135,000 rands. Where is that coming from? It comes from the opening column of the cost statement. Nothing has changed. It comes from the total of the cost statement, and that will be the opening balance. Then after now we will have to record again the material that was incurred during the current year. So now where we have to acknowledge the cost incurred during the year in terms of labor and in terms of overheads. So now let us also do that in recording this ledger account. So now it means we'll have to record on the debit side of the work in process. We'll have to record the cost incurred during the year first. In the current year, we incur two costs. Which is material transferred to the current year and conversion cost. So now we'll have to split those two and record material control on the debit side. Material control. And our material control that was issued in the current year is 894,400. Is 894,400. 894,400. Then after we have other costs that we incurred, which is conversion cost, and we know that conversion cost, it is direct labor and manufacturing overheads, and these two are combined, meaning because they are combined on the debit side, we'll just say wage control. Wages control, and we say less manufacturing overheads. Then after the total of the two would have been 1,392,240. Sorry, it's not 1 million. It will be 410. It would have been 497,000. Therefore, 97,840. 497,840. 497,840. 497,840. That will be the material transferred during the year, the wage control plus the overheads combined, all on the debit side. Then after we know that under work in process, we record finished goods. Finished goods. And we have seen that from the allocation statement that the goods that were finished, amounted to how much? Completed units, 1,247,067. 1,247,067. Those will be the completed units. And we know that completed units are finished goods. And finished goods, they are recorded on the credit side of the work in process. So now that will be a total of 1,247,067. So now that will be the total of the finished goods. Then now if there is an abnormal loss will be reducing the value of the inventory. Abnormal loss will reduce this account, abnormal loss. And our total abnormal loss will have to be recorded in total on the credit side, reducing this ledger account, because abnormal loss is an amount that is a loss that we will not get back again. So now we have lost the value of that, and abnormal loss will be reducing this account on the credit side, and that means it will be a total of the abnormal loss. There we do have abnormal loss. Abnormal loss amounted to 25,432, and it was split into two, into conversion and to raw material. 25,432. That will be 25,432. Therefore now that will be the total of our abnormal loss, 25,432, which is our total abnormal loss. So now with that, it means we'll be able to balance this ledger account. And we balance this ledger account, and after we balance it, we'll have to take the total of the bigger side, and the total of the bigger side would have been 135,000 plus 894,400 plus 497,840. That will be 1,527,240. 1,527,240 minus units that were finished, 1,247,067 less 25,432. Then that will give us 254,741. This is our closing. Let us check if does our closing balance. So now our closing balance carry down. Closing balance, or let me just say balance carry down. Balance carry down. Now our closing balance carry down is supposed to be the same as that one, and we remember that our closing balance carry down amounted to, yes, 254,741. So everything is correct. Now either we do the ledger account or we do the statement, we still get to the same thing. So now this statement reflects the same ledger account that you have done in integrated accounting. Therefore now we'll have to bring the balance here on this side. Then we'll have our balance brought down 254,741. So now this is also another important aspect that you must take into account whenever you practice how you must account for the work in process ledger account. Thank you guys. Hope you have enjoyed that.